Huge news for NIO stock. China officially released. EV stock will make billionaires sooner. Are you interested in NIO stock news? What's the latest on the stock market? And have you heard anything positive or negative about the stocks you're interested in investing in? Are you interested in NIO stock news? Hey everyone, welcome back to Stock Market News, where we bring you the most recent news about NIO stock. Before we begin, make sure you subscribe to our channel and click that bell icon too so you don't miss out on any of our amazing videos. And let's begin! After the Chinese government indicated that it was exploring severe measures to improve manufacturing production, the stock of NIO and other electric vehicle companies is poised to turn the corner higher and head in the right direction. This is a monumental information for Chinese electric vehicle stocks like NIO. The electric vehicle industry is centered in China. There, 60% of the world's electric vehicle batteries are manufactured. Therefore, the production of electric vehicles will continue to develop in tandem with China's industrial output. The quicker that corporations can manufacture these automobiles, the sooner they will see a return on their investment and become profitable. And their stock prices will shoot up very soon. Additionally, China has declared that it would be extending tax benefits for consumers who are purchasing their first electric car. These were going to run out of time after the current year. However, in light of ongoing economic instability and problems with the supply chain, it has decided to prolong the suspensions beyond 2023 and perhaps even further. Because of this, demand should remain steady, and because demand drivers, as well as supply factors, have been strengthened, the bull thesis on EV stocks is becoming stronger. This is especially true for NIO, which Luke considers to be one of the best electric vehicle stocks available to purchase right now. Current NIO news. NIO will debut a new product on June 15th. Likely, it'll be the ES7, a 5-seater electric SUV built on a modernized, highly automated driving architecture. After a delayed debut caused by China's COVID lockdowns, NIO plans to begin shipments by late August. Some market analysts anticipate that the ES7 will compete with the Tesla Model Y and BMW X5L SUVs in China. On June 9th, NIO significantly reduced its first quarter net losses, exceeding market expectations. As EV deliveries increased by 28.5%, revenue surged by 24%, just outpacing growth. The weak EV delivery guidance for the current quarter prompted a rush of analysts to lower their price targets for NIO shares. However, the EV manufacturer reported an uptick in production and delivery from the beginning of June. During an earnings call, NIO management allegedly discussed plans to launch a mass-market electric vehicle in the second half of 2024. The long-rumored cost-effective NIO sub-brand might expand the company's target market, hence driving growth. The Chinese manufacturer of electric vehicles has stated that it will manufacture its battery packs beginning in 2024. The growing Tesla competitor recorded 7,024 EV deliveries in May, a 38% increase over April. In April, NIO sales were down 49% due to tight lockdowns that devastated the EV supply chain. Nonetheless, several municipal governments gave subsidies to increase EV and general car sales. This covers Shanghai, the largest market for NIO and Tesla in China. In May, the Securities and Exchange Commission placed NIO and Xpeng on a list of foreign businesses at risk delisting if they do not open their records to U.S. inspection. Already on the list was Li Auto stock. Earnings and fundamental evaluation of NIO. NIO lags on crucial financial measures and other fundamentals. It is a young, rapidly expanding business that is still seeking to generate a profit. The EPS score for NIO stock is just 8 out of a possible 99. The EPS rating compares a company's profit growth to that of its competitors. NIO has an SMR rating of D, with A being the best and E the worst. The SMR rating is a composite assessment of sales expansion, profit margins, and return on equity. On June 9, 2022, NIO reported a 12-cent loss for the first quarter, compared to a 49-cent loss for the same period in 2021. Revenue grew 24%. NIO sold 25,768 EVs in the first quarter, an increase of 28.5% year over year and 3% compared to Q4 2021. Despite the volatility of the supply chain and the difficulties in vehicle delivery arising from the recent COVID-19 comeback, we had significant demand, NIO CEO William Ben Lee stated in a press statement announcing the company's performance. At the end of March, the EV startup had $8.4 billion in cash and equivalents, slightly less than the $8.7 billion it held at the end of 2021. Analysts surveyed by FactSet anticipate that NIO's losses would nearly quadruple to 59 cents per share for the entire year of 2022. It is anticipated that annual revenue would increase by 60%. As a result of the introduction of new electric vehicles and the easing of chip headwinds, analysts anticipate that NIO's losses will be significantly reduced to 19 cents per share in 2023, while revenue climbs by 71%. Despite pandemic-related difficulties, NIO more than quadrupled EV sales in 2021. 31 analysts out of 33 tracking NIO stock recommend a purchase. According to FactSet, 2 analysts have a hold rating, while 0 analysts have a sell rating. Analysis of NIO stock price. The 50-day moving average was regained by NIO shares listed in the United States on June 14th. Following its lackluster forecast for the current quarter and a general market decline, NIO stock snapped a 3-day slide. Fears of delisting have helped NIO shares recover from their May lows. The once popular EV stock, however, remains significantly below the 200-day moving average and much farther below the January 2021 highs. After a drop, the relative strength line for NIO stocks gaining ground. Throughout the majority of the year of 2020, it exhibited a significant increase. A rising RS line indicates that the stock's outperforming the S&P 500. It is the blue line in this chart. The stock received a dismal IBD composite rating of 19 out of 99. The rating integrates important basic and technical characteristics into a single number, and a 24RS rating indicates that NIO stock has outperformed only 24% of all stocks in IBD's database over the last year. The B- accumulation distribution rating for NIO suggests moderate buying by large investors over the preceding 13 weeks. 928 funds had shares as of March 31st. According to the IBD Shares Checkup tool, there have been no quarters of increasing fund ownership in NIO stock. China's EV competition increases. NIO aims to dominate China's luxury electric SUV and automobile market. Both Chinese and American automakers are vying for a position in this market. General Motors, Ford, and Volkswagen all offer luxury electric SUVs manufactured in China to Chinese buyers. NIO CEO William Li predicts that by 2030, EVs would account for 90% of China's new automobile sales. NIO anticipates launching 3 additional EVs in 2022 under intense competition. In late March, the company began shipping its first electric vehicle, the ET7. NIO aims to release the ET5, a 4-door car, in September, and the ES7, a 5-seat electric SUV, June 15th. The ET7 is a competitor to the Tesla Model S, according to NIO CEO William Li. He anticipates that the Model 3 competitor ET5, which is smaller and cheaper, would increase NIO's client base. The ES7 is a rival to the Model Y. NIO now sells the ES8, ES6, and EC6 as luxury electric SUVs. NIO is developing internationally while boosting capacity in China. It now sells EVs in Norway and plans to expand to 25 countries by 2025. BYD and XPeng are also present in Norway, and Li Auto intends to reach the European market. On the continent, Chinese EV manufacturers such as Tesla are competing with Western automakers. And that's it for today's video. We sincerely hope you enjoyed it. If you did, please give it a like and share it with your friends and family. And don't forget to subscribe to our YouTube channel where you'll see more of our incredible videos. Hey, we look forward to seeing you in the next one. Thanks for watching.